Welcome to 10lessons.net. Welcome back, I should say. How to trade like a professional. A 10-lesson course that teaches you everything that we've learned from the last 30 years of making profits. Disclaimer before we go on, all our information, our websites, our books, our newsletters is tutorial. We're here to teach you how to trade, teach you how to make profits consistently. And so all our information and content must be used for information and educational purposes only. 10lessons.net, as the name suggests, is all about all the tools that we use. And you are on lesson 2. So congratulations to you. You know what the trends are by now, hopefully. Lesson 2. So we're going to cover how to draw support lines, resistance lines accurately. Many people get this wrong. How to use Fibonacci retracement tools. These are really important in calculating where the price is going to stop and reverse back into the trend. Understanding pivots and why they're important. Pivots give us a reversal. If you get a pivot at the retracement, Fibonacci retracement area, then you have a great opportunity to enter a trade early or even wait for the trend to re-establish. So let's crack on with lesson 2. So lesson 2, we're going to be covering support and resistance lines, Fibonacci and pivots. Remember, all these 10 lessons add up to a fantastic system. And it's best to do all the 10 lessons to learn everything you can and then put them all together, and we will support you all the way. So this is gold, and as we've seen last year, we was in this for about 6 months. We've done very well, and it went to $2,000 plus. Now it's 1804. This is a nice pullback, but let's see what's going on. Let's draw some support lines and resistance lines. Now you might not be using the same charts as us. The thing to remember about support and resistance lines, it's okay putting a line every time it touches a high or a low, but the most important and most significant part of a support line, it has to be touched, in our opinion, 3 times. That's my phone going. Awfully sorry about that, but back to the gold and support and resistance lines. Let's put some lines on, and we want horizontal lines to start with, don't we? So you can see on the left here, there's quite a lot of congestion here. So let's draw a line, and when we draw a resistance line or support line, we want to make sure that it has been touched 3 times, as I said earlier. I quite like black lines. Remember that these lines should stay saved on your chart at all times. There's another one there, isn't there? Let's find some more. Let's do one there. Now this is quite a long way off. This is pretty much 5 years worth of data. So these support lines and resistance lines aren't going to be relevant for quite a while, but you never know. So for instance, we've got here on 1805, for instance, on the in this area here, as you can see from back here, this is a major support area. Once price breaks through a previous resistance area, as 1775 was, then it becomes a support area. This is now bouncing off a support area. But this is significant and a potential another move upwards. Let's draw some more. Now, of course, at the point where the trade price action moves on that price, we obviously don't know what's going to happen in the future. But we do have past information. So, for instance, here we had this line here touched 1,213 back in 2011. This touched it twice. It touched it 3 times, and then eventually the price failed to stay above this line, and then became it fell to $1,000 or thereabouts. Again, once this price moves above this line, it then becomes support, and eventually the price did bounce off it again and move back up. Now, as I say, we want this price to touch at least 3 times, so you might want to adjust your line to correspond with that. You don't want it just touching twice. 3 times or even 4 times here is significant. So as the price moved up above this, which was resistance line, it then became a support line. Again here, this resistance line, as the price was moving up, became resistance, but then it broke through it and then it becomes support. Again here, 1775, price is resistance until it breaks through it. So this is a very good way of having targets. Now we do this every week. I do this every Sunday. Review the support lines, resistance lines on all the charts, and I send this to our VIP members. Let's just jump into the US Swiss for a second. Okay, now we're going to jump on to Fibonacci. Now this can be used on any time frame. We've used this on the, this is 2 hour. The US Swiss is long, and if you've done the lesson 1, which you should have had by now, you'll know about moving averages. We can see that the blue line's moved above the black, prices above all moving averages. That's the rules. We have a stochastic below, you can see that. So with Fibonacci, we want to look at a retracement, which is likely to bounce off it. We have Fibonacci retracements. I do it manually. So I left click on the lowest low, the recent lowest low, to the highest high. That one there, could be that one. There we go. I like my 50% to be black and a quite lot wide width, because remember, blue's okay for the 61.8. Because remember, we don't know what's going to happen, but what we can safely say is that the price is going to move down to the 50% retracement level, bounce off it more than likely, and have your stop below the 61.8%. Because what can happen, of course, is the price doesn't bounce off the 50% retracement. It may well bounce off the 61.8% retracement. retracement. As we can see from the stochastic, you don't want to enter in overbought conditions. We covered that in lesson 1. We want to make sure that the price is neutral and it gives it much more room for a much bigger move. We don't have a target on this. We're in profit. It's a quiet market, doesn't matter. One thing that you can do, of course, is you can set and go, which we do with all our positions. Sell and go, so you know in advance where the 50% retracement is. You can sell a buy down there with a stop down there, and then just close all chart. We don't tend to set targets, but we can at a later stage. If it goes to 200 or 300 pips profit, then we may look at setting a target. So that's Fibonacci. That's the support and resistance lines. Now, as you may see here, they're quite faint actually. Let me see if I can embold these for you. Yeah. So let's widen the pivots. Oh, there we are. Yeah, took a bit of time to refresh there. So here you can see hopefully the pivot points. Now this is today's pivots. So you've got a pivot, so support line 1, S1, and support 2, resistance 1 and resistance 2. Now this point here, where we had a 50% retracement, which was yesterday, the pivot S1 was being hit at the same time. So if you see, obviously confirm your trend on your lesson 1, the moving averages, the stochastic, etc. Look for a retracement down to 50%, and if that coincides with the pivot as well, this is a very powerful combination. Hopefully you found this helpful. Lesson 3 deals with divergence, a massive tool which we often use to get into positions early, and it helps us to predict where prices are going next. As all our leading indicators like divergence, Fibonacci, pivots, stochastic, moving averages, they're all leading indicators. Thanks for your time today, and I look forward to seeing you on the other side in lesson 3.